Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, July 12th, 2024. It is 11:14 a.m. Eastern Time as I'm starting the video, and what I'm going to do in this one is share. I told you yesterday I was going to share. I've been looking and finding quite a few setups on the bullish side. And this is a sector that I found 2 days ago when I started digging down deep into different sectors in the market. And it's starting to take off. So I'm going to start with this one here. I do have other sectors, both long and short, that I want to highlight. And as I mentioned in the earlier video today, this is video number 2. It's a great time. This is where the market is starting to, show some cracks. So you're going to have opportunities both on the long side in certain sectors and then some on the short side. So this one is one of the more bullish sectors that I've been highlighting. I told you I'm looking for sectors that, for whatever reason, look constructive. This is recreational vehicles on TC2000. It's IX 1190. But so I went through here the other day, and you can see I've marked up all these charts. And when you look at the video, you see the pop-up box. This was 2 days ago. You can see I created these trend lines on July 10th, and before, sure enough, they popped the very next day. Didn't set price alerts as I went through this sector, and most of them broke out yesterday. So this one, in just 2 days since the breakout or since I marked it up, it's already run over 10%. Now, look, it just broke out, and this is impulsive buying. The volume's a little suspect. I'm going to say that right now on this, at least on this one. I'm just noticing that you did have a little bit of surge on the breakout so far. And so here's the thing: I wouldn't chase them right now. I'll go through each one. Let me back up. I'll speak to each one on their own technicals. Now, this is certainly bullish. Again, this is a stock that's come off this, and it just trades so well. A lot of these trade so well to the technicals. This one's down 31%. Watch, rinse, repeat, right? You got a beautiful bearish rising wedge, complete with requisite, or not requisite, but what I like to see, the negative divergences, followed by a downtrend. Once you got a sell signal and a break of the trend line, followed by you got it, divergent low, aka positive bullish divergence, rally, bearish rising wedge, breakdown, negative divergence at the top, and now bullish falling wedge breakdown. So this is the pattern of this stock. When I was marking them up, and again, I haven't touched it since 2 days ago, but I'll start to add some levels in here. And where I'm going with this one is, did I chase it up 10% in 2 days since the breakout? No, but on a pullback, yeah, maybe. If the market holds up. You guys know my thoughts on the market and positioning right now. I mean, some of these I didn't even fully mark up. You can see divergent low there. This guy, again, this is THO, Thor Industries. Just trades beautiful to the technicals, to the charts. BC, again, you can see right here, created that trend line on the 10th before pre-breakout. Boom, pop, pop. Look at this thing, rocketed up since then. It broke out shortly after I did that, and also up 10%. Took out even the secondary trend line there that I had from the other day. Where to? This one, again, I didn't even get as far as marking targets. I was just marking the bullish setups. Right there, 79.50. First stop. And again, on a pullback, that's why I'm highlighting these, because this is nothing but bullish, the breakouts. Now, keep in mind, this is what happens if I'm right. I've got market top ranges on SPY and QQQ that I feel highly confident in. And in a bear market, and these stocks are in a bear market, make no mistake about it. They peaked back in 2020, right? 2021 or 2020. And it also reversed right off that uptrend line recently. So where I'm going is, you get in a bear market, you get these bear market rallies, you get these beautiful textbook bullish setups, and then they pop, and there's a lot of short covering. So that's why you see these quick gains. And again, if I will follow up if we get objective re-entries, or if the market holds up, or look, if you see things different from me, and I know some of you do, and you think we're just going to blow past those top of my market top ranges, then this sector has a lot more meat on the bone. You can see from the trends here, measure them out. Just grab your little measuring tool. That last uptrend there was almost 50%. And this downtrend from that high was about 32%. So that's the nature of this company and these stocks. So 10% is just the start. Ideally, you want to buy on a pullback to support. Where would that be? I'm going to move this line here down to right there, 73.10. 73.11. I think that's decent price support if you can get it there. Otherwise, it's going to maybe just keep pushing up as these shorts get squeezed out, hit that level, and then maybe on some consolidation, bull flag continuation pattern, pull back to support, something like that. It may pop and then head on to these next targets. DOO, didn't mark this one up because I didn't see too much in it, but I'm going to add a line now that is certainly relevant. There's a potential downtrend line, and if it pops that, it's probably going to run up here as long as the momentum's in this sector. There it is, so 75.15. I'll just leave it at that now. Harley Davidson. This was, I'm kicking myself for not sharing these, but it's not too late. If the train had completely left the station, I wouldn't. There's many things I find, and I've had on my watch list, and if they've already run, I don't even bother bringing them up to you. Created on July 10th, again right here, and then pop yesterday. And usually when I see these setups, I set price alerts. So yesterday I was so focused on trading the NQs. And as I told you, a lot of sectors, I noticed almost everything else was up. It was all about the Qs. And I was actively trading with the reversing those at the lows yesterday and going long. So my eye was off the ball. And that's what, look, the takeaway here, guys, set price alerts on if you're trying to follow a lot of things. I've literally thousands of charts marked up, but at any one point in time, I'm following, half a dozen or more sectors, plus various commodities, precious metals, treasury bonds, and things like that. This one was a trade idea back here off that divergent low, and we hit my first and only target right there, almost to the button and reversed. So again, and just, off that divergent low, even let's forget about the divergent low. From the breakout to my first target, it rallied 18%. And so this one's up since the breakout. It actually broke out right at the open yesterday and kept going. So it's only up from the breakout about 5.5%. So let me add now what I didn't do before. You can see here, this is an old line here from 2023. This is the one I created 2 days ago. So I'm going to add another line right here. Level, I'm going to call it a little bit, roughly about 37-ish right there, maybe a hair above. Here's an old line. That was old T1 back here, but that's still, you can see, even though it was, my projected resistance target back then, it's had reactions since. So I think that's also another potential target, 39.82. Again, especially if the market holds up. So what's the takeaway here? Other than, they run, maybe a partial position now. You could always do that and add to on either strength or weakness. But I see more meat on the bone for this than, say, something like NVIDIA or Microsoft, or tech that's already way overvalued and with negative divergences. This is the opposite chart. These are bullish, stocks that are beat down coming off multi-year lows and with positive divergence and probably a lot of short interest to boot. All right, so there's Harley Davidson, PII, another one. Look at that, created that trend line on the 10th right here. And since then, the perfect breakout yesterday, I would have had an alert trigger right there. And from where I marked it up, it's already up 11% now, 10.7. And I'm going to add, again, what I didn't do. I was just adding the wedges and the divergences and things. I'm going to add this would have been my first target right here, right where we are right now. Why? And I'm just picking a random level. Reaction low, reaction high, definitely resistance. So, and it's, again, if the market doesn't poop the bed like I think it might, then this sector goes up. And another way, guys, is, again, if you're trading a long short portfolio, long the most bullish sectors and bullish stocks, short the most bearish, then that in itself is a hedge. So let's say you are short the NASDAQ 100. Then, you can be long these sectors that have nothing to do with the tech sector and consider that also an indirect hedge. You know me, I don't do direct hedges. It's a waste of money. The only person that profits is your broker. And that's, if you're, in other words, if you're short QQQ, you buy shares long, or you buy the leverage long, or you buy puts. You buy calls. then that's again, it's an offsetting trade, generating fees and commissions, especially with the options and the decay and all that. I just, like I said, either if I don't have enough confidence in a position, I either close it or set very tight stops and let it run. I like to do that more often than just closing it out. If I'm in something, all right, instead of getting rid of it, it's just I'll put a stop real tight, and if it goes my way, great. If not, I'm out with minimal get back, or I'll hedge up indirectly. So PII pop that level. It should go up to right here next. So first target 82.30ish, right about where we are. Then 89.30. That's an old level I created back in 2019 off this divergent low, maybe. Don't know, but that's still a significant level. And I'm going to add one more right here. Okay, and I'm going to take this line down. So these are your potential targets, near-term targets right there. Giving, if that max potential targets hit, it's about 101. That's another 23% upside from where we're at right now. LCII, I didn't mark it up 2 days ago because I intended to revisit the sector, clean up, add some levels to the charts, and get them out to you guys. But I'll do that now. It had a divergent low right there, a little wedge pop. And again, it's the sector's moving. The last 2 days are all up about 11-10%. So, and again, just breaking out. So, up 11% there, but it's still, before all said and done, had another 51% to go. So. Again, to reiterate, I wouldn't bring it up if it wasn't worth mentioning. So we missed the ideal entries from not having price targets. But again, it's a sector on the move. Winnebago, I didn't mark it up because it wasn't my kind of chart. But you can see from where it was 2 days ago when I found the sector, it's up 12%. Probably going to stop about right here for now. So again, maybe on a pullback, guys. Let's see, downtrend line as well. Perfect. Yeah, right at downtrend line resistance. So I will revisit these if we get objective entries. And of course, if you have any questions, want a chart marked up on a particular one, I don't like that trend line. I'm just playing around with these charts. Let me know. MBU, I did mark that one up 2 days ago. And since then, this stock has climbed about 12%. I didn't change. This line was already there from 2019, so I'm going to move it. It was an old level. Yeah, I'm coming in to where I see it's not a super good level, but yeah, these recent lows and lows there. So again, they're all probably, for right now, need to take a breather. Who knows if this market powers up, and there's, I'd have to really dig down and see how high the short covering was, or the short interest in a lot of these. Never underestimate, and I certainly wouldn't get in front of these and try to short and game a pullback here. I would wait to either buy a pullback or breakouts. There's a downtrend line. This is an old level I've had too from 2019, so you can see it actually is a reaction high. I didn't touch it since then, so I'm gonna just leave it there. It's a 39.32. It's that previous reaction high, potential target. That's an old level there. And okay, so where would be the maximum target? Look, this line I've had here. There's the downtrend line off the highs back in early 2021. That one I added that back in January of 2023. And no, I updated it 2 days ago. You can see the update in the box, updated on July 10th. So that's max potential bounce target, and that would be if hit. Depending if and when, remember, downtrend lines are dynamic, meaning they come in at lower levels every day. It's about 42% to maybe up to, let's align with that 49, 45, 46.59 level I had. That's about a 36% more upside from where we're at now. And so if it can pop this wedge here, then that's a potential. And if the market holds up, you're not going to see these guys going up if the S&P 500 drops 20%. But if the S&P can power up, and again, that's why I told you yesterday, I'm looking at a lot of sectors that have more promising setups in order to either diversify or pure play if I just decide to go all long in the coming weeks here. And this will be the first of several. I'm going to do more. I haven't marked all the charts up. Again, it was kind of a cursory quick overview yesterday. This one's just been building big divergences for some time now. One Water Marine, ONEW, a big divergent low right there, and it's in a downtrend. There's your downtrend line. I don't have a clear, solid read on it. There is some price resistance right here. Comes in these reaction highs here and these reaction lows. So if we can pop that and then pop the downtrend line, I'm going to give you two targets. I'm going to give you 35.75, and this is an old line that I'm going to leave there, about 37.88. So there's your two price targets, or call it a target zone, and that's about 25 to 33% above current levels if hit. MPX Marine Products. Actually, it's funny what put me on this sector is I called a company owned by one. I think it was Marine Products. They must make boats. I was looking for a company that I believe is public trade. I called to get service done on my boat, and that put me in. That's kind of how my tangential brain works. So I took a look at the sector. That was 2 days ago, and you can see again these guys are all up 10% just across the board. And I think there's even an ETF for them. I'm going to get to that one second. But either way, this would have been my first target. All I did is put, as you can see here, the divergence line 2 days ago, created on July 10th. Positive divergence, and noting these divergent lows. But again, look at how much these guys can run, 126%. They're still by just about every metric in a bear market that began back in, this one peaked in 2018, and it's been moving down, and it's closer to its 52-week multi-year lows than highs. So again, I want to be very clear but this is the thing, guys. I love bear markets. I love bull markets. I love bear markets. But bear markets are more profitable to trade if you are flexible and nimble, because the bear market rallies are explosive. You can make no mistake about it, bear market rally. And it was 125% in a matter of less than a year. That's the nature of those kind of rallies. So either way, look, keep it simple. If it pops 991 with conviction, 1242. That's just right now. And then my next target, yeah, there's a gap there, 1308. So the potential on this one is 25 to 32% right there. And then we'll go from there if we get any traction. MCFT, that's MCBC Holdings, positive divert. Oh, I moved it, but you can see created that yesterday, 2 days ago, I'm sorry, on the 10th, and just trying to clean the lines up. Like all of them, it's got price resistance right here. So had I taken the breakouts, I'd be taking profits here to recycle back in, or what I like to do sometimes is just tightening up stops in case they just continue to run. This one's probably going to go to the downtrend line in this old level I've had here, 2115, give or take. Nope, I'm going to add one more level. Yeah, I see quite a few reactions there. So this is a near-term target zone right here, downtrend line and these two resistance levels. If it pops a downtrend line, should be smooth sailing up to about $24 right there, and that's going to give you a gain of about 25%. And again, let me reiterate, these are most likely not going to do that if the stock market poops the bed. I did a previous video. I told you I just went back short again into the NASDAQ 100, but the S&P 500 held up yesterday, so relative to the NASDAQ. The big losses were in the NASDAQ. So that's where, again, if you want to, if you are short tech, big tech or the NASDAQ 100, you should be bullish the most. You can be bullish the most bullish sectors. This one I just marked up now. Keep in mind, I stopped around here because you're getting down to these smaller companies. The first one I covered, THO, was a $5 billion company. I sort when I go through a sector, as you can see to the right, I always like to sort them by market cap, so I know I'm paying attention to the big names up top. You're not going to go bankrupt, from a $5 billion company doesn't just suddenly go announce a delisting or bankruptcy. It's when you get down to the bottom, and that's what I'm telling you. So as I've gone through this list, I'm moving down lower and lower in market cap. Where was I? Right here. Now I'm at a $45.5 million company, not a 5 billion where I started. This one drops down to 5.9 million. There's some of you out there, and some of you can just buy this company right now, buy every share if you got, 6 million bucks laying around your bank account or whatever. So that's how small, and it's Twin V. They make great, well, not great, but good boats. They're popular down here, But look at this. This is just, they had a surge like everything COVID, and everybody was buying boats, and now they pumped out. Everybody bought a boat, and most of the COVID boat buyers realize they're not boaters. There's two type of people. There's boaters. I've been boating my whole life. I'll be boating to the day I die, as long as I can run a boat. And then there's non-boaters that want to get a boat. They think they want a boat, and then they realize there's a lot to it. It's not for them. And so either way, my point is, be very careful. This stock has entered penny stockville. What does that mean? Well, if you trade too long below $1 a share, you face a delisting notice from the exchanges, and then so they got to get their share price back above $1. I'm trying to make this annoying tool go away that I just added here by mistake. Bear with. All righty, got rid of that error channel. Anyway, okay, couple things happen if the market holds up, or forget about the market. If this sector, for whatever reason, this sector holds up, there's a $1 level. It's the magic number. From my experience, these stocks that drop below $1, once in if and when, and they do everything they can. Believe me, they know. So insiders are gonna buy shares, do a reverse split, whatever it takes. But there's the $1 share price. So what happens is they tend to rally once, if and when they can regain that level, especially before getting a delisting notice. Plus, you have a downtrend line there. So if they can pop they can pop the downtrend line. That would be your first buy signal. If they pop the $1 level, it's probably going up to $1.22. That would be a 22% rally, right? You don't have to be a math expert. 22% gain, even just above the $1. If you pop the trend line, or even heck, you're bullish. You see momentum in this sector now. You see the bunch of the bigger names breaking out. Take a position here. Call it Vegas money. What does that mean? Don't put any more in this than you're willing to go to Vegas. So you're going to put in your pocket whatever your number is, whether it's 500, 5,000, or 550,000. You're willing to lose it because you're going to a casino. Same thing with this. So you can play money. There's no buy signal on it, but there are buy signals on almost all the big names in this same sector, as I just showed you. So this one will probably start to rally in sympathy, and there's your potential. So, and if you only put a little amount, a small amount, maybe a fraction of what you'd normally put in like SPY or anything, it doesn't take a lot, because if you make 122%, you've more than doubled your money, and it's like making 10% on a SPY trade, same dollar amount, gains is what I'm talking about. And then let's say it happens a rock after that. Let's say call it up to about 152 would be your next target, or 150 we'll call it. All right, see, now you get down here. FRZA is 5.9, also $5.9 million company. VMAR, big divergence. Again, you can bottom fish. I've already told you the risks when these companies are down low. There's a reason for that, and not just delisting. The risk of bankruptcy rises and everything else. So you can wake up one morning, they're not going to tell you ahead of time. There's going to be a Chapter 11 bankruptcy filing, and then most of your money's gone. So, I'm just pointing out. But risk and reward go hand in hand. The gains can be explosive. We had one false breakout, but that popped into that 77 resistance. So here's your levels. Breakout number 1, price target 177. And then if that breaks out, it should rip right up to 102. And as I mentioned, if it gains back above $1, the potential's big. Let's just say that this stock market and the economy has a lot of life left it. In 2024 and 2025 are going to be growth years. This guy's probably got a good chance it can go back to 332. There's a 561% gain from what it is right now. The risks are bilateral. So I've said that enough. So do your own thing. EGZO, there's a 1 to 40 reverse split. See, they wanted it back above $1. They got it to $1.80. Big divergence, but it's also been on a trajectory, a downward trajectory since the day this poor thing came public. I don't know what they make. I think golf carts, EasyGo, yeah, if I'm not mistaken. 99, almost all your money lost if you bought the IPO. There's some of the pitfalls and stock trading, especially if nothing else, getting married to a position and just holding it and holding it and praying and hoping. You'll never get back to where you were. It's almost statistically impossible. Most people don't realize if you lose 50% on a stock, a position, you don't have to make 50 to get back to where you are. You have to make 100. That's how that works. So at this point, to get back to where this thing peaked on its IPO, it'd have to go up 42,724%. So anyway, so again, it's just these are gunslinger trades here, but I'm covering them because this is how the stock market works. When there's momentum in a sector, the big names start to go first. Then, if that continues, if it's not just a 1 day, 1 week wonder, a little brief thing, if those names continue to rally, they'll start to come and bottom fish these lower tier stocks here, and the gains again are potentially explosive, as are the potential losses. So if I say that one more time, but bears repeating. It does, because I've done this long enough. Most people just see dollar signs. They don't look at. They take trades. They don't calculate. Okay, well, what if it goes to here? I'm looking at this price target, but what if it goes this way? And I put X amount in, and that's why, remember, a great tool I created years ago is the position size calculator here on the site. You click right here on the top. I want to see this little thing here, and it can quantify for you. And this is, you need to beta adjust your position down, and it'll quantify for you how much you're going to lose in dollar terms, right? And so, this part will. All righty, let's go to the last one, MCOM. Boom, there it is. There's an example. They tried to pull a little finagle here, 1 to 150 reverse stock split, right? To try to save the ship. And then boom, that flat line means they either got delisted or this is probably a delisting. They couldn't keep it above $1. See that? They tried, and after the reverse split, it kept going down, and they got delisted. So it's not that it went away, but it'll go onto the pink sheets, bulletin board, or whatever, and then the liquidity is just not there, and they don't have the reporting requirements that listed stocks have. Okay, that's it. I'm going to keep it focused. So this one's just recreational vehicles. I think, yes, I told you, I believe, when I was typing, I think there's an ETF, recreational vehicles. Maybe not. Oh, yeah. No, it's not. It's, yeah, no, that's not it. Okay, so maybe there's not an ETF for that. So you'd have to, you can, I always say this, if you like a sector, bullish or bear, long or short, and they don't have a sector ETF, what I do, for the example, the pot stocks, before they ever had any pot stock ETFs, I'd make my own. And I always said that on the site. I would take I just went through 24 charts. Every component of the sector, showed you which ones I liked, levels. And what you can do is just, with the zero commissions nowadays at the brokers, you can easily, with even small odd lots, meaning less than 100 shares, if that's your thing, you can build a diversified, your own ETF, if you will. Take the most bullish looking ones, whatever your number is, whatever you can manage, 3, 6, 12. I know that might seem hard to manage, but what I do, and highly recommend, I always have, I think it's the best thing since sliced bread, OCO orders. OCO orders, one cancels the other. So for example, in the last video, showed you these levels here on QQQ. Remember the bullish falling wedge yesterday, and these 3 targets right here. This is we're at that max target right now. And so let's just say you short QQQ here, or you short anywhere in this range, right? An OCO order is very simple. You have 2 orders, one cancels the other. Some brokers call them OCA orders, one cancels another. It's the same exact order. And so you have your stop loss right here, let's just say. You don't want QQQ to go above that level, and then your price target's going to be wherever it is down here. And so some brokers put them under an area called advanced order types, like I think Fidelity, or conditional orders, but that's it. And so what it does is you can set it and forget it. You can turn the computer off. You can go sail around the world if you want. One of two things, and only one of two things can and will happen. Either you're going to hit that stop, in which case it's automatically going to cancel out that order for you. Or you're going to go down and hit your price target, in which case that order will be canceled. And the reason you need to do it this way, if you don't and you're not paying attention, again, you're having 7 or 8 stocks in the recreational vehicle sector. You're trying to manage that. You're trying to manage, I'm going to get to the retail stocks in a second on the next video, give you some short setups there. But what will happen is, let's say you go get stopped out here and then you're out of that position, but now you don't realize it because you forgot you have a order to cover right here, on a short trade. So you got your stop was hit, so you're out of the short position, but now you have a buy order here. And if you're using interactive brokers, they don't differentiate buy to cover. Some brokers don't. It's just a buy order. So if you have 1,000 shares QQQ you shorted, you have a buy stop for 1,000. You have a buy to cover, buy stop. Yes, a buy stop. They'll buy you out if your stop is hit, meaning the trade's going against you. I'm doing, shorting is like longs and backwards. And this is your limit order to cover your profit target, right? And so if you get stopped out, you still have an order to buy 1,000 shares. But now QQQ drops, you don't have a position. And you're going to buy 1,000 shares and you might not be aware of it. So that's where the OCO orders come in. They're going to cancel each other out. And again, it allows you not only to be able to effectively manage a position, even if you're not watching that position 24/7 or while the market's trading, but it also affords you that discipline that a lot of traders lack. That, okay, I have a plan. My plan is short here, cover here, and stop out here. But what happens is a lot of traders getting there and it still looks bearish. So I'm going to give it a little room. And next thing you know, the damn thing's up here. So that's the discipline. And same thing with the price target. This thing starts going down. You're going to get more bearish, and then you think it's going to go down forever. And then what happens is, so you pull you don't cover your planned price target. And what will happen is thing is going to maybe punch right down through it and then reverse hard, and you're going to get back profits. All right, enough of that. Like I said, those are the things that I believe are very important in trading, is having a plan and then utilizing those, especially not for everyone. I do this full time, so I don't put OCOs on every trade, but certainly when I leave town, when I go on vacation, or I'm have an appointment or something, I have to want to run errands. And especially if I have positions getting close to a stop or a price target, yes, I will use them. And I highly recommend them for anybody that's a part-time armchair trader, to use them. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.